Hi everyone, welcome back to my channel. For today's video, we're going to talk about the order to cash process. We'll cover a basic scenario for beginners, and as we go through the tutorial, we will also try and relate those processes to SAP. Towards the end, I will be providing a summary table. This is a table that I've created that should serve as a quick reference or guidance. Just so we're organized with this tutorial, I will give you an overview of the discussion. First off, we're going to start with an introduction of OTC. Then we're going to move on to the simplified process. And then towards the middle, we will try and relate or link the OTC process with SAP. And next, we will talk about some additional information in case you guys are interested. And as always, there will be a summary of our discussion. So this is also where you'll find the summary table that I've created for this tutorial. Let's get started with what is OTC. Personally, when I hear of OTC, it would stand for order to cash. But when I hear of this, I associate it to the following keywords or phrases. Here you see order to cash, customer, shopping, buying stuff or a service, accounts receivable, and of course we're taking into account the perspective of the company or business. So if I were in the shoes of the business, my mindset is that I'm selling something. This time let's talk about some scenarios. So first, you go to a cafe and you buy yourself a cup of coffee, so that's pretty straightforward. The second scenario is that you call a moving truck service to help you move your furniture, your stuff to a new location, your new apartment, so on and so forth. And the third scenario is that you place an order online for a new mechanical keyboard. All of these three scenarios above show an exchange of product and or service. So this is between you and the business. And of course, when you're talking about this exchange, once you get the product or service, you also eventually pay the business for the service or product. In this case, if we put ourselves in the shoes of the business, we can actually say that we are getting sales and money for providing our product or services. That being said, if we take into consideration the whole process of order-related tasks up until getting the actual payment of the customer, that would make up the order to cash process or cycle. For now, let's try and stick with that understanding. As we move through this tutorial, we will add more details. So that's order to cash, and if we were to talk about the simplified process, a simple way of looking at it is to consider the 4 steps below. So that's pre-sales, order processing, order fulfillment, and then billing. So these are the 4 steps. Let's go through each one of them. So if we're talking about pre-sales, this would talk about anything before an actual order is created. So let's say you have a customer that would ask about the price of a product or would need a bulk of that product to be provided monthly, or the customer wants to understand the different price points, the different packages. Typically, whenever there is a discussion between the customer and the business, this would fall under pre-sales. And then once we go to the order processing, this talks about the creation of the sales order. And this is basically the commitment of the business to provide the requested product or service. It's already logged as an order. Next, we have order fulfillment. And this time, the business will fulfill that commitment to the customer by providing the product or service. I mentioned here that, for example, the business will deliver the product to the customer or give the product. Lastly, we have billing. So since the product or service has been completed, the product is with the customer. At this point, the customer should be able to pay for the product or service. And usually in this scenario, the customer is provided with the breakdown of costs and a payment happens. These are the 4 steps, and it's pretty much simplified. We're gonna try and add on to this by relating these steps to SAP. When we talk about OTC and SAP, I want you guys to remember those 4 steps. Let's consider them as scopes or categories, whatever you would like to call them. But this time we will try and dive a little bit deeper into the OTC process steps in SAP and categorize them. So if we look at the table below, we still have our 4 steps or our scope. We have pre-sales, order processing, order fulfillment, and billing. If we try and expand those categories, scope, or steps, we have inquiry, quotation, and contract for pre-sales, sales order for the order processing, delivery and PGI, as well as shipment for the order fulfillment, and billing as well as customer payment in the billing portion. Let's try and go through each of these steps to get a quick overview of what each step is trying to accomplish. So again, here is a summary image of the categorization that I've made. Let's start off with inquiry for pre-sales. This is where a potential customer would ask about a product or service. It's pretty straightforward. It's an inquiry from a potential customer. So I did include how much would this product or service cost me as an example. The second would be a quotation. So after obtaining details from the potential customer, what type of product or service the customer wants, the business would provide an answer in the form of a quotation. So this would include the product or service requested and a corresponding price. So other details may be included, but the important part is that the price and the product or service requested is there. My example here is that the product will cost $100 for a pack of 15, for example. So this is really high level. It's just to get you guys associated with what a quotation is trying to provide. Next up, we have contract. And this is where the potential customer may mention that he or she wants the product to be delivered every month. The customer needs the product monthly, and so there's some sort of agreement between the business that, okay, will you be able to provide this to me every month for the next 5 months? And if the business is okay with that approach, there is some sort of formal agreement that is established between the customer and the business. And you can clearly see in the contract that I would need this product to be provided monthly for 5 months, for example. Next up, we have sales order for the order processing, and this is where an actual order will be created. It can be in reference to the quotation or the contract. And this means that the business is committed to providing the product to the customer. There is no actual sale yet because it's still an order. We don't have any accounting entries yet, and usually when you're talking about a sales order, you'd have the following detail: pricing info, product info, so on and so forth. Now that the order is created, you want to trigger some sort of delivery. So from the sales order, a delivery occurs to trigger and give the product to the customer. It would facilitate activities like picking, which is getting the product, packing, which is packing the product in a box or something like that. And of course, you can consider the arrangement of a transport or shipment. We also have the post goods issue, and this is when goods are moved as part of the process to bring that product to the customer. And this is needed because this signals that the product or an item from the business has been removed from the stock or the inventory, and it will be given to the customer. And because of this PGI step would trigger a log of material movement. This means that there's movement of the material from your inventory or your stock. In this case, because of this movement, it will trigger accounting entries, which we will discuss later on. Next up is shipment. So this is to bring or transport the product to the customer. Lastly, we have the billing portion and the customer payment. So for billing, when the product reaches the customer, the billing occurs. So you'll have this breakdown of items as well as their final price. Usually, businesses wait for the customer to receive the product before billing, but in other cases, it is also possible to bill the customer before the product reaches them. It really depends on what approach the business is doing. Now, because of this billing, that would trigger accounting entries, and this highlights that the customer needs to pay for that product or service. Finally, when a customer pays the business, that would also trigger accounting entries. So if you're looking for an image version, I do have it here. You can open it in a new tab and you should see it in a larger view. We talked about all of these steps, so from 1 to 9. At this point, one good thing to note is that not all steps are required. For example, you can skip number 1, 2, and 3, inquiry, quotation, and contract, and go directly to the order processing by form of a sales order, which is number 4. Why does this happen? So this happens whenever the customer doesn't really need to do or make an inquiry from the business, or he or she doesn't really need a contract or a quotation. Usually this happens with a returning customer, meaning to say the customer is already aware of the product or service and the corresponding pricing. So this is one example. Another example is shipment. So number 7, shipment can be skipped if the product or service is directly provided to the customer. For example, if you're just buying a pair of shoes from a shoe store, you're buying a coffee, you get your coffee on the spot, you don't really need shipment. And in some cases, when we talk about SAP, if a third party handles the shipment, it really depends on how SAP would handle that. So will SAP keep track of that shipment? Will it not keep track? It really depends on the needs of the business. Next up, we have the order to cash SAP Transaction Codes and Tables. I have summarized them over here. So from inquiry up to the customer payment or the receipt of money, we have the following transaction codes as well as the corresponding tables. I mentioned also here that for this asterisk shipment, it's not needed if it is sold directly to a customer. I also mentioned that I use T as an indicator, which is over here, the T part of the T code, to denote transport. It's just something that I have in the back of my head to remember. Next, for billing, I mentioned that we can recall concerns whenever a billing document is blocked. So in some cases, you will receive concerns that a certain billing document is blocked in SAP. This would generate some concerns from the business because this raises the issue of the accounting document not generated. So usually when you have a billing, this is still a sales document, and once it is released for accounting, that is the only time that it gets an accounting document generated. So if there's an issue with that, the billing document is blocked, no accounting document is generated, that is where the issue lies. Lastly, for the 3 asterisks, I mentioned that you can view FBL 5N for open items. Of course, these are transaction codes that you can access in the standard SAP GUI, but of course, if you're using Fiori, then you would access the corresponding Fiori apps. But if you were to do it on the actual SAP GUI, this should still be your guide. Next up, we have OTC Accounting Entries. So this is something that will be useful for financial accounting focused modules or SAP consultants that fall under that module or scope. You'll notice that these process steps have the corresponding indicator if there's an accounting entry or an accounting document. For example, for inquiry, quotation, and contract, there are no accounting entries and no corresponding accounting documents. If, however, you see entries in the box, for example, like this, for PGI, we have yes, and we have the cost of goods sold debit and the inventory being credited. And of course, that is the accounting entry, and for the accounting document, you can consider the maintenance in transaction code OBYC. So this is part of the configuration. If you encounter issues with the GL account that has been assigned by the system, then you can check this maintenance. I also mentioned that when it comes to the movement in material, this should trigger the auto generation of material document, and this material document will also generate the accounting document. So at least you have a background of this flow. Next, for shipment, if the business keeps track of the costs that are involved with shipping the product, then that would most likely flow to the billing or invoice details through the pricing. And of course, if you keep track of the shipment costs, you can create a document through this transaction code. The rest would follow the same consideration. So for billing, if you encounter issues with the GL account or any sort of assignment, you can consider the maintenance in this transaction code. So on and so forth. Next, for the integration points, in some cases I wanted to mention that there could be confusion between several teams as to who will investigate, who will handle this type of issue. It's possible during go live phases or even normal support processes. And I wanted to mention that when we talk about the overall OTC process, it can involve several teams. For example, we have sales and distribution, finance, logistics, so on and so forth. There can be several teams. Of course, in terms of the overall whole process, it is mainly SD or sales and distribution with the support of finance. I mentioned that there are certain areas where finance would be best suited to check a certain issue. For example, if there are issues with the payments or accounting entries, then of course finance would be best suited for that checking or that handling. Ideally, of course, it would be good to collaborate with both teams or even other teams that are involved. Here I have a table that shows the integration points for SE and FI in case it is helpful for you guys. For example, here from inquiry all the way to delivery, we have SD because mostly these are sales documents anyway. And when it comes to the PGI, which is where an actual accounting document or accounting entry is involved, then that would mean FI would come into the picture in cooperation with SD. And this follows up until billing. Of course, I did mention a while ago that if the billing document is blocked, most likely the accounting document has not been generated, so that would be an issue. Lastly, we have customer payment, so this would fall under FI. Next up, we have additional information for those of you who are interested. So what we discussed so far is a basic OTC process. Now, if we consider a more in-depth OTC process or explanation, you would expect more steps or touch points to be involved. I did include some examples. So when we talk about e-commerce, here we have a multitude of payment options and buying channels, from mobile apps, official brand website, marketplace, in-store ordering, you name it. So there are so many options. There could be a step for fraud management. So that's something to consider in terms of the business, especially if they're handling multiple channels, multiple payment options, so on and so forth. Another example would be customer credit management, where the focus will be on the pending payments or outstanding payments of the customer. Lastly, we have the summary, and this is where I mentioned that you'll see the image summary of the table I have created for OTC. Again, you can open the image in a new tab. So you get a larger version of the image and you can save it or use it as your quick reference or guide. The same details are included and it's basically summarized. There is also a table format in case you find that useful. It's over here. So that's basically it for the basic order to cash process in SAP. I hope that you're able to find this useful. Thank you so much for watching, and I'll see you in the next one.